Hey, welcome back, guys and gals. JJ here once again, schooloftrade.com. Today's trading psychology question of the day. He says, before I found you on YouTube, I joined one of those cheap chat rooms a few months ago to learn how to day trade. I lost all my money in my account in only a few short weeks. I wish I didn't know the story of how that went. He says, I've learned that people who, this is true, I've learned that people who know how to trade won't give away their knowledge for 99 bucks a month. You're exactly right about that too. But needless to say, he goes on, this experience has killed my self-confidence and I need to find a way to get it back. Do you have any suggestions for getting back my self-confidence, getting back on track? Great question. Thank you, by the way, for sending me in your questions. And something I think that every trader deals with on their journey to becoming a successful, consistently profitable trader. You know, most traders assume that self-confidence comes from positive thinking, you know, that to be self-confident, you're just going to be an optimist, right? But, you know, in my own personal experience, self-confidence is knowing that you can handle the worst situations and come back stronger than before. In other words, self-confidence doesn't come from being right all the time, right, or never being wrong. It comes from surviving the times when you're wrong, right, or surviving the times, right, when you're at your worst. And I'll tell you right now, a great way to build self-confidence is to focus on how you trade, the actions you take after you've lost money. You know, we know that confidence is built by overcoming challenges. And the biggest challenge we face as traders is digging out of a hole from a previous losing trade. So as I think about the answer to this question today, in my opinion, I'm going to give you five ways, right, or five aspects or five pieces to building confidence after a loss. 1, following your rules when you enter your first trade. 2, keeping losses small on that trade. 3, avoiding revenge trading, right, staying patient. 4, and we're going to talk more about these as we go in. 4, entering the next trade correctly. And 5, managing the next trade correctly. Okay, so let's jump right in there. First, right, number 1, you need to make sure you're following your rules, entering the correct trades at the correct time with the correct entry technique, right? You should have a specific trading plan, a plan that you know works, right? How do you know it works? You're either working with someone who has demonstrated it works, or you personally have seen it work before, right? And not just once or twice, right? You got to see it, and I mentioned this in some previous videos, right? It's earned, right? Confidence is earned, right? You can't buy it. Now, your trading strategy should have specific entry rules, and you need to follow those rules to ensure you're not trading outside of your plan. All right. If you're trading outside your plan, you don't need confidence, right? You need patience. And that's definitely another topic we'll talk about on another video in this series. Second, you need to manage that trade correctly. You know, once you take a trade, you need to manage that trade correctly so that if you do take a loss, the loss isn't too large. If you take big losses, it's going to be almost impossible for you to dig yourself out of that hole. So one of the most important aspects of building confidence is keeping your losses small, right? Giving yourself a chance to earn your money back. You know, I have a lot of students that I work with every day in our trade room, and one of the most common things that I hear is they love the fact that I use little 10-tick stops, right? Use a big stop, and no wonder you got no confidence because you lose all this money, and how are you ever going to make it back? Right, this is one of those times where trade management is so important for not only keeping your self-confidence high, but building it back up if you learn it. Okay, third, after you take a loss, I know we don't want to think about this, right, this topic, but it's going to happen, right? Losses are part of trading. Okay, now is the time to buckle down and follow those rules. But this is so much easier said than done, isn't it? Right? Nobody likes losing money. And when I was a new trader and very much naive about how the markets worked, I would take losses personally, you know, which made me angry, right? And that anger would send that first domino, right? We talked about how to avoid an emotional meltdown. I'd quickly go right off the rails and start taking revenge trades, right? Give me that money back. Take those revenge trades. Don't do that, right? Don't do that. After you take a loss, avoid the emotional meltdown that can easily follow, right, by taking a few deep breaths, read your trading plan again, break the cycle, right, break the pattern interrupt, Get out of the office, go for a walk down the street and back, right? Whatever you do, do not follow a loss by allowing your emotions to get the best of you, okay? So after you take a loss, your instincts are going to tell you to find another trade as quickly as possible to earn that money back. But you need to resist that urge to jump back into the market until you find the next reliable trading opportunity. So your instincts are going to say, once you take that loss, your instincts are going to say, go back and get it, right? We are loss-averse creatures. We don't like losing stuff, right? There are so many studies, right, in what's called behavioral finance or behavioral psychology. Go to Amazon, you'll find some great books. I would recommend a book called Nudge, Nudge. Go to Amazon, you'll find it, by a guy named Richard Thaler. He won a Nobel Prize in economics. You'll love that topic. Okay, so again, it's your instincts to want to chase after that loss and get it back, right? Because we don't like to lose anything, no matter what it is. Okay, losing money is, of course, the worst. Now, once you've resisted your instincts, and I know this is not easy, right? Remember, I said earlier in this video series that being a trader is not easy because we're human beings. We're not computers. Okay, but now that you've kept your cool after that loss, and the loss that you took was very small. Again, you can see why it's so important. Make the losses small, keep your cool after the loss. The most important thing you can do now is wait patiently for that next trade. Okay, now I remember this. When I was learning to trade, I never wanted to finish the day in the red. And every second that ticked by would inch me closer to forcing another trade, which would undoubtedly be another loss, making the situation even worse, right? I know I'm not the only one. I'm not the only person that does that, right? Right? Don't you hate being in the red at the end of the day? Oh boy, it's one of the things I really hate the most. At least I did when I was a new trader, right? But you have to be okay with ending the session with a loss. And one of the easiest ways to get over that fear or the frustration of finishing with a loss is to start thinking in terms of weekly performance rather than daily performance. In other words, I judge my success at the end of the week, not at the end of the day. You know, I have clients that take this even one step further, and they don't even worry about their results until the end of the month, right? Take the pressure, put the pressure at the end of the month, right? That way you can be flexible, as I always say in my trade room, be firm on your goals, but be flexible with your approach. So pick one that works for you because it'll take the pressure off of you, right, to force that next trade, which will probably end up putting you even deeper in that hole in the end of the day anyways, right? So now that you have the pressure off, wait for the next trade that fits your rules and take it with confidence. Once you re-enter that trade, your instincts will be to make a much larger target, right? Because you'll want to go back and make back that previous loss, right? After you take that small loss, you get back to staying patient. You wait for that next trade, doing everything correctly now. When you get into that next trade, right, your instincts are going to be, again, go back and get that loss back. What's going to happen is, and I did this week in the trade room, and I looked back at my results, and I said, you know what, this is exactly what I'm talking about here, is that when you find yourself after a loss, you're going to want to make sure that next trade is the biggest winner possible, and you're going to want to put that target a mile away. Okay, one of the hardest parts of trading is staying conservative after that loss, right? And so remember, if you've managed that first losing trade correctly, the loss should be pretty small. And most importantly, it should have been small enough so that your next trade doesn't need to be a home run for you to make it all back. So stay conservative after that loss. This is your chance to prove to yourself that you can use your rules and manage the trade correctly. So the next trade you get into, okay, no home run trades, keep following that plan, right? Be conservative, be disciplined. Now, at this point, you're doing everything within your power to be successful. You're following the rules of a proven trading strategy. You're keeping your losses small. You're keeping your emotions from clouding your judgment, and you're entering new trades and managing those trades the exact same way that's worked for you in the past. What if you take another loss? For me personally, this is tough, right? Back-to-back losses always results in a 20-minute timeout. Furthermore, if I take another loss in that same session, I'm done for the day. Because at that point, it's either me or the market. Either way, it's not working. I'm losing valuable capital, whether it's my fault or maybe the market, right, doesn't work that day. Either way, I need to live to trade another day, and that capital in my account is way, way too valuable. Some days the markets just feel cranky. They don't want to move well for whatever reason. Okay, don't stress out about it and don't force the market to. You're not going to force it. And some days we aren't at our best. Maybe you're sick. Maybe there's a personal issue in your life, right? It happens to the best of us. It's going to happen. All right. So this is where using a weekly goal or a monthly goal rather than a daily goal really comes in handy. I'm constantly reminding my new traders that when I say a trading strategy has a 75% winning ratio, that means 75 out of 100, not 7.5 out of 10. That means it's completely okay and it's completely reasonable for you to have a losing streak of 2, 3, maybe 4 consecutive losses, even if you're doing everything correctly, right? But if you're flexible with it, right, you'll give yourself a chance by the end of the week and then the month to bring it back around. It's important that you remember trading is a game of pattern recognition, right, that follows the law of large numbers. So give yourself the flexibility to allow those large numbers to work for you. Okay, don't be unrealistic with your expectations. If you find yourself in a position where your strategy didn't work well today, don't let it get in your head. Come back and do it again tomorrow, right? And measure your results at the end of the week or the end of the month. If by the end of the week or end of the month you're still not making profit, now you need to take a closer look at you or your strategy. Remember, it's never the market's fault. We have to take responsibility for our actions, responsibility for our results, right? We claim victory when we make money, and we have to accept defeat when we lose money, right? It's not the market's fault. The sooner you understand and accept that, the more successful you'll be, not just in trading, but in life overall. We've covered a lot in this video so far, so let's do a quick recap. What's the best way to build self-confidence? Building self-confidence comes from overcoming adversity. And the biggest type of adversity we face as traders is digging ourselves out of a hole. Here's a handful of steps to overcoming this challenge. First, follow your rules getting into every trade that you take. Second, keep losses small enough to overcome them easily. After a loss, avoid revenge trading. Stay patient, break the cycle of the emotional meltdown. Next, follow your rules to enter the next trade. Manage the next trade correctly, right? Don't let your instincts take over and try to hit a home run on that next trade. Manage it correctly and conservatively. Remember the law of large numbers. Okay, 75% means 75 out of 100, not 7.5 out of 10. Be flexible with your results, but firm in your long-term goals. Next, have a plan in place to avoid excessive losses. If I take 2 back-to-back losses, 20-minute timeout, right? Cool off. I'm not going to let myself do it again, right? It's not going to happen. 3 losses in a day, I'm done for the day. It's either me or it's the market that day. I'll come back tomorrow. Protect that capital, right? Use weekly or monthly profit goals. Okay, don't try to put the pressure on yourself to make that money in one day. What if the market's not moving very well that day? Are you a failure? Of course not, right? It's not you. The market simply doesn't want to move that well that day. It's okay. Get over it, right? The market is never at fault. It's you or your strategy in the long term. Take responsibility and make it work. If you want to build self-confidence, you need to prove to yourself that you yourself can overcome adversity. You can't buy it at the store. You can't get it from somebody else, right? And now you have the tools to do that. Also, building self-confidence is one of the most important aspects of trading psychology. So look for more strategies to build self-confidence in coming video lessons. Boy, guys, once again, I hope you found a ton of value in today's video newsletter, video psychology letter. I would love to hear from you about additional topics that you might be struggling with as traders. So do me a favor, drop me a comment below this video with any topics you'd like to see me cover in my next psychology video. Make sure to give me a thumbs up on the YouTube channel if you found value, and don't forget to share this with a friend who can also benefit as well. It doesn't matter what markets we trade or what strategies we use. Even the best experienced traders battle with their emotions when there's money on the line. And don't forget, you can find me every morning. I'll be working hard tomorrow morning, every Monday through Friday, 8 o'clock Eastern Time in my trade room. I look forward to seeing you there. Catch me every every evening on my nightly newsletter at 8 p.m. Eastern Time. And if you want to learn more about the strategies we use here at School of Trade, grab that free trial on the homepage of schooloftrade.com. My name is Joseph James. I want to wish you guys well out there. Hope you guys are loving these these psychology videos. Keep in touch. Be well. Be nice to each other. And be here next time. Adios, amigos. Bye-bye for now.